This is In the Money with Angela Miles.
Thank you, Germany. Hello, everybody. I'm Angela Miles. Markets up today on some better than expected economic news out of Germany. Meantime, I'm watching Bank of America, which is getting heavy play here at CBOE. Right now, it looks like the 10 and 11 calls are very active in the weeklies on Bank, which expire at the end of this week on Friday. Apollo also has weeklies. The earnings are coming up for Apollo after the close tonight, and it doesn't look like traders are really looking for any kind of huge move on this thing. It looks like most of the plays are centering right around where the stock is trading, which is around $43 or so. The 44 puts are active. There's at about an 80 volatility. There's some call buying as well, right around the 43 strike. But they're really not anticipating any great shakes coming up in the show. We'll talk to Andrew Keene of KeeneOnTheMarket.com, see how he feels about that stock. Also, Lionsgate. Okay, this is absolutely huge. There are reports that this company made, or the movie rather, Hunger Games made $155 million in its opening weekend. That is a huge record breaker for Lionsgate. Meantime, a lot of people are playing the options. The stock is up around 4% today. It's trading in the $15 range. They seem to want the 15 and 16 calls in April. The volatility is around a 61. The volatility was very high going into the release of Hunger Games. It had been around an 80. I had my option strategist check on May to see what was shaking out there, and it looks like there's some May 15 and 16 call buyers stepping into the market at much lower premiums because the volatility there is around a 55. IBM, boy, once it broke through $200, it looks like it's continuing to hold on to those gains. The stock is trading right around $207 right now. It's getting some positive talk from analysts today. People are moving into the market with the weeklies. They want the 205 and 210 calls on IBM. Those calls expire at the end of this week. Coming up next, Trader Talk after this break. Trader Keene, president of KeeneOnTheMarket.com, joins me now. He has a few thoughts on Apollo, which comes out with earnings tonight. So what's your play on Apollo?
Well, actually, I was trying to sell a call spread in Apollo on Friday, the weekly call spread, and I didn't get filled. And I like to put a lot of my spreads in mid-market, so I don't like to sell bids or buy offers because when the markets are usually pretty wide. So I put in an offering yesterday on Friday, it didn't get filled, so I'm going to put it in again today. Stock get a nice little pop today. It's up about 80 cents, 85 cents. So I might have to readjust my strikes a little bit higher. I like to sell like dollar call spreads for 30, 35 cents. So I might be able to get an extra dollar higher now because I didn't get filled on Friday. So I'll be looking to get short that one through short weekly call spreads.
And so what strikes again on the short?
Probably the 44, 45. I'm going to do it right before the bell. I talk a lot of times. I don't want to put an earnings play on until about 5 minutes before the bell. I want to do the weeklies. I want to do a very tactical play where I'd be risking about $70 per one lot to make $30, and it'll be a weekly call spread, and it'll be to the upside because I don't think Apollo will have good earnings. The stock has sold off a lot this year into a strong market. I think there will be a lot of window dressing. I've been talking about it on the show for a while. I'm long equities, I'm long futures, and I think we'll get more window dressing. Hopefully that Apollo doesn't go up with the rest of the stocks.
And as you know, there's been a lot of regulations on those education stocks of late, so that could be an issue.
Yeah, they have a lot of competition, increased competition from universities now starting online programs. Also, the regulatory problems have been good. Also, their enrollment numbers have been going down a lot, and we see this with a lot of their, the similar companies like Stryker, the competition or Strayer Education. The enrollment numbers have gone down, and if the unemployment goes down and the unemployment we're seeing is getting better, that means more people are working, which means less people are going to school. So this has been really bad. I mean, the market's up about 15% this year, and we see Apollo down about 25%. So I like to sell weak stocks instead of trying to pick the bottom and go bottom fishing.
Thanks for your thoughts today. That's Andrew Keene, president of KeeneOnTheMarket.com. Thanks so much for clicking on. I'll be back tomorrow.